Hi, welcome to the Greatland Gold stock analysis. I'm going to be doing a deep dive into this potential tier 1 gold discovery. And just to clarify, I'm a shareholder for full disclosure, and I'm really excited about the prospects. So let's get really dug into it. The share price has been moving up quite rapidly recently. Earlier on this year, you could buy each share for around 2p, and they're now topping out over 8p per share. So there's been a huge amount of growth already. What's driving that growth, and how valuable could each share become? Let's look into the next related topics. Just a pre-warning before we start. This is going to be a deep dive into Greatland Gold, and as a result of it, it's quite a long video that's proposed with quite a lot of analysis and some different scenarios. I'll put down in the description how you can jump straight to the valuation page if that's what you're interested in, but I hope that you stick with the whole video, and I hope you enjoy the extra time I've put into this particular video. Thanks. If you like, please like the video, comment and subscribe. It helps the channel a lot. Thanks very much. Just to run through the agenda for today's presentation, we're going to look at the overall project pipeline for Greatland Gold. We're going to do a deep dive into the Paterson Project, which has the Havieron Target within it, which is where the main excitement is being driven from the Greatland Gold, and the people doing the drilling at that particular site is Newcrest Gold via a farming agreement. So we're going to talk a little bit about Newcrest Gold, how their strategy impacts Greatland Gold, the risk of or the opportunity for takeover, and that builds up part into the overall investment thesis, the valuation, and I've gone into quite a lot of detail to show all the different possible valuation outcomes dependent on the gold price, dependent on the size of the reserve, what post-drilling outcome, and also based on the head grade of gold. So we can, I've got a view on where I think that's going to land in order for me to value the company, but I've given full transparency over all the different outcomes based on my calculation. So if you have a different view, you should be able to pinpoint roughly how it translates into the share price. And then I've done a little bit of optioneering about what happens to Greatland Gold in terms of, do they get taken over, do they spin off part of the business, how's that likely to play out, and what different scenarios could come up from that. So what got me into Greatland Gold from the beginning? Well, I started to see these news reports and clips coming out about some exciting drill results which have been coming from Havieron, which is part of the Paterson Project, and there's a lot of speculation that this could be a 20 million plus ounce discovery, which would make it globally significant and one of the biggest discoveries in recent times. And when a junior miner brings in a gold major, and that gold major takes the drilling program really seriously, it's an interesting sign for me that there's something exciting happening. And then when we top that off, that it's west side of Australia, Australia is a super mining jurisdiction. It's in a locale with existing mines, existing infrastructure, which make future developments like this easier. It was really time to look at the company in a little bit more detail. And when I did that, Greatland Gold do seem to have some wider opportunities within Paterson Project and potentially some other high value targets. So first of all, a little bit of a warning. This for me clearly falls into the speculation bucket, and the difference between investment and speculation really is, from my side, there's zero cash flows at the moment coming from this business. They are a discovery and exploration company, and they may never survive through until an actual producing mine, due to being bought out if it's successful, or selling the asset to a bigger mining company that's better served to develop the mine. And so as a result of that, I have to treat it as speculation, but I still believe that speculation is a level up from gambling, So how do I differentiate between gambling and speculation? I guess I set a framework and some rules around my own speculation. First of all, it should never be more than 10% of my overall portfolio. Otherwise, the risk exposure is just too high. Quite often, it's probably one of the more exciting parts of the investment portfolio, but I like to keep that limited and keep it in perspective. Recognition that it's a risk, the risk profile for this type of business is higher than normal, and I still need to perform due diligence and not just purely make a wild guess at things. And I want to try and have a non-correlation within my speculative portfolio. What do I mean by that? Diversify in terms of jurisdiction, if it's a similar commodity, different commodities, and maybe different industries. And then I'm trying to predetermine the exit criteria in terms of the value. So what's the value of the share that would make me sell, and what type of time horizon will I give it to achieve that time period to get to that value. I also spend some time looking at the management team, when there's no cash flows, and therefore looking at the balance sheet and the income statement and stuff doesn't give you as much value. I need to spend a bit more time looking closely at the individuals, their track record, the messages and the communication they're giving throughout the period that I'm looking at the company, and try to understand the shareholder and share structure, because it gives away certain clues to how the decision makers within the company might act, depending on different scenarios. And that's the only way that I can basically elevate my speculation above pure gambling. But clearly it's still not at a level of investment where you can pull on tangible cash flows to assess the valuation of a company. Looking at Greatland Gold's overall portfolio, they're all exploration projects, many of them in relatively early stage exploratory drilling or surveying phases. I'm not going to go into them all, and there's a specific reason for that, and that's mainly to do with the high level of attention being driven by the Paterson Project. So the Paterson Project is located in Western Australia, up in the kind of northwest region. It's in an existing mining territory. The blue markers on the map show the exclusive rights that Greatland Gold have got within the area, and what isn't shown here is all the gaps in between those blue boxes. They're basically clustered. All the mining majors and some other juniors have all acquired the stakes all in and around this, and it's because it's already got some significant mines, Nifty, Telfer, to name a couple of important ones, and we'll come on to why Telfer is really important for the Paterson Project later in the presentation. But here within the red box, this is really where the major excitement is at the moment. The drill results that have been coming from that part of the business have been truly outstanding, and it's starting to pick up interest. Here you can actually see all the mining majors stakes that they've got in and around the Paterson region, and you can see all the existing mines. What I'm going to do now, though, is really just talk you through the agreement that Greatland Gold has made with Newcrest. So Newcrest, being a mining major, have a much higher level of resources than Greatland Gold, and probably a super amount of expertise to bring to the project. So there's an agreement reached whereby Newcrest would acquire rights for 12 blocks of land, including the Havieron Target, and they would commit to spending a certain amount of money, a minimum commitment of $5 million, on a drill campaign that needs to be conducted within 12 months of the agreement in order to start to understand what we've got within this target, and if those stages are successful, they move on to the next stage and they continue to acquire additional portions of the stake within this 12 block tenement. And so as a result of that, if they go all through the 4 stages, which would typically only happen if the results are positive, then they would acquire 70% of the total amount, but they'd have to spend a minimum of $65 million in order to achieve that. And that period would likely take, or was planned to take, up to 6 years. However, what we've really seen happen here is that Newcrest have gone very, very quickly through stage 1 and completed stage 1, and now they've just completed stage 2 and earned the 40% farming interest. However, at the stage 2 level, we haven't yet got the results, and we're expecting those in only a matter of days. And what was interesting here is, as they went through stage 2, we got information that additional drill rigs were being brought on to accelerate the drilling campaign, which was really exciting development. And there's been some really super coverage of the drill rigs and how they're moving around the site, provided by Paddy Gal on Twitter. And within the description on the video, I'll leave a link to that Twitter account. It's really provided outstanding coverage of the developments on the ground using the satellite imagery. And we've had some discussions around developing this video, and there's been some support provided which have been really invaluable, and so I can't thank Paddy Gal enough for the support in preparing this slide pack. So here we are, stage 1, stage 2 completed. Stage 3 looks like it's going to go ahead. Newcrest managed the drilling during the farming period, and part of that agreement says that there is an agreement for the ore to be processed at the Telfer Gold Mine. Telfer Gold Mine is about 35 kilometres from the location of the drills, and has already all of the capability to process the ore, and is coming to the end of its useful mining life from the Telfer mine itself. So there's capacity in order to take on this task. What does that mean for Greatland Gold shareholders? It potentially lowers the capital expenditure needed. There's also leverage of infrastructure and a reduction in time to develop the mine, which hopefully creates higher net present value to the shareholder, which is great. I mean, the only additional impact it brings is some additional trucking to move the ore from Greatland Gold site through to Telfer. So it's worth pausing a moment just to talk a little bit about Newcrest Gold. Who are they? What do they do? What are their specialities? And it's important for the overall picture. So Newcrest have an exceptional reserve asset base, which is significant even amongst all the gold majors. Top left-hand quadrant shows those, and we can see they've got 2 extremely large sites with extremely large amounts of gold reserves. And we can see right on the right hand side Telfer, which is now close to being depleted, and in the bottom left quadrant chart we can see some details around the Telfer mine. It's got approximately 3 years of life left, and it's basically now, it was an open pit mine, but it's drawing gold both from the pit but also from an underground mine, and we can see in the top right hand corner the different types of mining techniques that are being used, and we can see the underground sub-level cave-in approach that's being used at Telfer there. And I think that's probably a hallmark of Newcrest, is they've got a very high degree of speciality in underground mining techniques. which makes it quite quite exciting when we look at the characteristics of the drill results and where the gold is situated within the Havieron Target. The bottom right shows you the processing facility that exists on Telfer that would be used post-farming agreement in order to process the ore and to get it into door bars. So what's got everyone so excited? Here's a list of the drill results so far. We can see really high gold grades in portions of these results, and we can also see a broad and large amount of gold at a reasonable gold grade throughout the drill results. So they've been consistently good. There's also a reasonable level of copper also coming off as a byproduct, which helps the business case. When we look at the drill results from a diagrammatic perspective, you can see the two main gold characteristics for this particular discovery. We've got the high grade sulfide zone, which is basically at the edge of a dome, which is like this purple curve on the left hand chart, with then a breccia zone, which are like veins of gold, and they are scattered and surround the high grade sulfide zone. And so we can see that the drill results cutting through at different angles are effectively confirming the presence of gold in those locations, and we've seen consistent results. What we haven't yet seen from stage 2 is they appear to have been stepping out the drilling significantly from this particular condensed location, and it'll be interesting to see to the extent where these gold locations extend to. If you look in the north west corner, we can see there that the boundary conditions of the gold deposit haven't yet been clarified, nor have they been in the deeper level either. And the graph on the right hand side really shows this in a 3D modeling perspective. One thing that we can say here is that the bulk of this deposit is underground, and so this is another aspect where the specialism of Newcrest Gold and the techniques they have in relation to underground mining is a really good fit for the type of deposit that's been identified here, whether that's through design and good management from Greatland Gold, or whether it was by convenience because of the proximity of the Telfer mine. I'm not sure, but the match seems to be very good between the two companies. Just taken out a selection of statements that have come out in the news. These are all in the last 3 months. Some of them are really outstanding. So I'll take the biggest one first, which is a Twitter statement from Newcrest. A new era in our asset portfolio. Grades like this are rare, and we're excited by the progress. And we can see a further statement below from the chief geologist, where the grades are amongst the most impressive seen in recent history, and we are very excited about the potential to bring these ounces into production as soon as possible. This, for me, is a confirmation of the data that we've been gathering, and through the satellite imagery we've seen, through the good detective work online from satellite imagery, where there's quite an acceleration of activity, and the Newcrest management team are basically confirming that, and we understand why, because we're in the middle of a gold bull run, and we need to, they want to get this gold into production as soon as possible. And Gervais Heddle, who's the CEO of Greatland Gold, is commenting on the commencement of stage 3 farming agreement by Newcrest, and he's delighted by Newcrest, and I think all the shareholders are delighted by the collaboration of Greatland Gold and Newcrest. It seems to be everyone's moving with the same strategic intent and the same direction in order to bring and qualify what this reserve looks like as soon as possible. So what's the principle of the investment thesis? Well, first of all, if we talk about the macro perspective, it's a gold bull market, $800 gold price. We've got the backdrop of quantitative easing and all other kinds of manipulation in the money markets for fiat currency, which typically drives uncertainty and drives inflation and drives a flight to gold, which is really helpful for a gold discovery. It's an outstanding jurisdiction. Most people consider that that Nevada and Australia are probably two of the easiest mining jurisdictions to operate in. There's existing mining operations infrastructure to utilise. We've got good exploration survey results. We've got good stage 1 results. We've seen a rush to accelerate stage 2 and complete that. We don't know the results yet, but why put all the effort in? Why expend all the money, and why rush to do it if you're not excited by what you're finding? Newcrest have secured additional financing. They've taken out a $600 million credit facility. It's a similar modus operandi to when they last made an acquisition. They did the exploration, they took out a loan prior to the results coming out, and then they secured the asset. So could this be, an indication that we're basically going to see the same thing? And then the Telfer mine is in the end of its life cycle. There's a unique synergy opportunity to derive more value from those processing assets. And also Newcrest have an ongoing challenge as a gold major to continually prove that they've got future assets and reserves, which is what part of their share price is built upon. And I think the catalyst for the next stage of price appreciation is likely to come from those drill results, which are due at the end of this month. All right, so now we're going to get into the valuation. The valuation assumptions that I'm going to make, I just want to state out here. So in terms of reserves, I'm going to use a range of different reserves, and I'm going to make a probabilistic assumption on the conservative edge of what that level of reserves could look like. I'm going to use a gold price based on an average over the last 10 years. I am going to price it out using a range of different gold prices, but in terms of my actual valuation, I'll take an average. What I'm going to do is, we don't understand yet the cost of developing the mine fully when in the pre-feasibility stage. So I'm going to use the Telfer underground mine and an average over their life cycle for as much data as I can obtain for the all-in sustaining costs as a proxy to estimate the all-in sustaining costs for the mine that's being developed within the Paterson Project for Greatland Gold. I'm going to take a view on how that's impacted by the capex, as there should be a certain amount of discount for the fact that some of the Telfer infrastructure is being used, and I'm going to use a valuation model where I'm going to try and calculate net present value and try to understand what the share price is using that. And what I'm going to do, which is quite a bold statement, is to be very conservative. I'm just going to discount all of the other targets in the Paterson project and the other assets within the portfolio and value them all at zero. Now, of course, this has a huge potential for upside, but in this speculative environment where we're making guesses about the size of the reserve, what's going to happen with the gold price in the future, and the development cost of the mine itself, I need to be conservative. And my gut feel is that when these drill results come out, the total market capitalisation of Greatland Gold isn't big enough to defend itself from a takeover, and therefore my guess is that they're not going to be able to develop the understanding of the other mines and assets potential fast enough in order to bring that value into the share price. But we'll see about that. But for the time being, this valuation is based solely on the Havieron target. So just take a little look at the all-in sustaining costs for Telfer. Looking over 2015 through 2019, we see an average grade of 1.55, and we see an all-in sustaining cost average of $1,140.75. That's US dollars, with a margin of just under $100 per gram. Sorry, per ounce. So what I've done is I've looked at a scenario for 5 million ounce reserves, and why 5 million ounce reserves as a starting point. There have been some private equity companies that have done some assessment on the asset and on the drill results so far, and that's an estimation that I have identified from those drill results, from other assessments that have been made, and I think that's a good starting point. So what I've done is I've assumed that 5 million ounces will be extracted linearly across a 20-year life cycle. I've done a net present value adjustment on the costs in each year, and at each different gold price I've determined what the total valuation of the asset looks like. This gives us quite a wide range, and I've repeated that for 10 million ounce, 15 million ounce, 20 million ounce scenarios. And I've also made assumptions on the copper byproduct using NPV technique again, using a copper price around $5,000 per tonne, and I've used an assumption on the basically the amount of ore needed to be extracted to get the required volume of gold, and then worked out how much copper is included within that ore, and added those into the price, to the total value for each scenario. So what I get here when I consolidate all that in, for the base scenario of 1.55 grams per tonne gold grade, with a copper byproduct at around 0.6% per tonne, I get total value for each different range, and I've converted that, divided that by a number of shares to get the target share price. And in here I've kind of color coded it to where my thinking is. So conservative on the reserves, relatively conservative on the gold price. I think the share price is worth around 12 pence based on this scenario at this gold grade. However, what happens if the gold grade is much better than anticipated here? If it goes up another 10% in gold grade across the piece, it basically adds my target share price to up to about 15 pence, and I think this is potentially reasonable, and this is what I'm looking for in the gold results. And then if we went up by 20%, we end up in this even more optimistic viewpoint. So you might have a different view on the reserve size and on the gold price. To me, you've got a bit of transparency here to have a look at my calculation, but effectively my personal perspective, and this isn't financial advice, and everyone else should conduct their own research, but where I'm looking at is basically, I believe that we, 15 pence target, $1,500 gold, 5 million ounce discovery is more than achievable, and that's my conservative assessment. So now we'll just dig into what happens to Greatland Gold now. Stage 2 results come out, they're not what's expected, they're worse. In that scenario, then I think probably the Newcrest development slows or stops. The share price probably crashes as a result, and speculations are pretty much over. If the results are really good, then I think there's a risk that they buy out Greatland Gold immediately, and actually that's my I guess that's my base case of the expectation of what will happen. It's not my preference, but I think that could happen, and I'd be looking to receive 15 pence per share for that to be successful for me. If they continued with stage 3, then of course it could continue to grow the price, and there could still be a buyout before we get to the end of the drill results of stage 3 or stage 4. But another option, which could be a preference for me personally, would be Greatland Gold spins off the allotted areas that have got farming agreement with Newcrest, but retains all the other assets. The shareholder receives a special dividend and or a royalty for the value of that asset, and we get to retain our Greatland Gold interests, and Greatland Gold get to use some of that money to develop some of their other opportunities. So my personal expectations for Greatland Gold is I'm going to base my investment thesis on 10 million ounce reserves, valuation based on a 1250 gold price, which is a cyclical average, which I'm comfortable with. And I'm going to use a 10% reduction on the Telfer all-in sustaining costs to just over $1,000 of gold produced, and I think that that's conservative enough, but gives the right level of opportunity towards where I think the speculation could end up. And I'm making an assumption that Greatland Gold gets bought out based on the Havieron asset by Newcrest as soon as possible. Although what I'm really hoping for in general is that Gervais Heddle and the management team really maximise the shareholder value in their next strategic decisions and in any negotiations around the company. I'm looking for a fair value of around 15 pence per share. I think that's reflective of the opportunity that exists here, and I would be comfortable with that, with a price of 3.5 pence per share as my cost base. But in general, though, I'm really excited and looking forward to see how this plays out in the future. If you enjoyed the video, please like, comment and subscribe. It really helps the algorithm and helps me to produce more of these in the future. Thoroughly enjoyed understanding Greatland Gold a little bit more. Thanks again to Paddy Gal1 on Twitter for all the support in building this up. And yeah, I hope that you enjoyed it, and I'll see you on the next video. Obviously, this isn't investment advice. Do your own research. I have no fiduciary responsibility for you. You need to do your own research, seek professional advice before making any investment, and all that good stuff. You can read the details here. Hope you enjoyed it and have a good one. Bye now.